Why did mortgage rates just fall? Isn't the Fed increasing rates? If this is your first time to this channel and you want to know everything there is to know about living in Arizona, then subscribe below and tap the bell for notifications so you can be the first to know about the changing market here in Arizona. We get calls and emails every day from people just like you, and we absolutely love it. Whether you're moving in 9 days or 90 days, give us a call, shoot us a text, or send us an email. All of the information is in the description below so we can help you make a smooth move to Arizona. Buyers seem to be running scared. Real estate, at least here in the Phoenix market, from the buyer's perspective, is kind of, I almost want to say, dropped off a cliff. What are your opinions?
I think everyone is just so scared because they don't know where this is going to go. Is it going to be 2008? Is it going to not be 2008? Let's just wait and see what happens.
Yeah, there seems to be a lot of that. I mean, there's always going to be people moving. In fact, if we go back and we look at the period from 2008 to 2011, which was the bottom of the market, there were still plenty of homes selling. You know, the whole point is what price. So there's a lot of sellers still thinking they need to get top dollar for their house. And quite frankly, there's not enough buyer demand to give top dollar. But we peaked in interest rates the week of June 23rd to June 30th. Interest rates peaked overall at right about 5.8, 5.9%. Okay. I saw many 30-year fixed being offered at that point, even up to 6.2.
Yeah.
All right. If we go back to January or February, that figure was more like 3.1. So interest rates doubling, for instance, since the first of the year has really taken a lot of people that want to buy out of the market. People are kind of afraid what are going on with interest rates. And this week, if we take a look at this graph, here for the last 2 weeks in a row, we've seen rates now decreasing. And that is in the midst of the Fed still saying that they're going to increase the federal funds rate by 3/4 of a point here in July and a couple more times before the end of the year.
The thing you have to always remember in markets, mortgage industry, they obviously have to make money and they have to predict where rates are going to go, because while we always hear about the Fed funds rate, mortgage rates are not directly tied to what's going on with the Fed funds rate, but they are impacted by it. And so when the rates increased like they did, they were, you would say, baking in the idea that the Fed is going to raise its Fed fund rate to a certain level. And actually, they did come in a little bit less than some experts were predicting the last time they raised rates. And so, in my opinion, the reason we've seen a little bit of a decrease in mortgage rates is because they overestimated where it was going to go to. And we're seeing a temporary correction.
A knee-jerk reaction.
Yep.
You know, which happens all the time. Because aren't 30-year mortgage rates more tied to like the 10-year Treasury note?
Yes.
All right. You know, and so, for instance, you know, when we take a look at graphs of anything, you know, take a look at the stock market, it will go in waves all the time. And so, you know, you'll get news, the market will overreact, the next couple of days it starts settling down again. What'll be interesting to me is to see, as we start moving forward through the rest of this year, if they don't settle down to kind of where they're at now. You know, in a lot of respects, I think that we've probably pretty much already priced in several future increases.
Oh, absolutely. Yeah,
And, you know, so pulling back, you know, currently we're at 5.3%, you know, this week. And that's pulling down over a half a point, you know, from where it peaked at around 5.9 back on June 30th.
Get outside of the immediacy of what's going on right now, because the immediacy is we were in such a seller's market with the lowest mortgage rates ever, and we've gone back to what would be considered low normal, but we've just done that so fast. You know, we are technically in now a fairly balanced market between buyers and sellers. We are at more historical normal mortgage rates. In fact, we're still even low if you look at historical mortgage rates.
Okay, just so before you move on from there, I want you to explain a little bit further. I said you're more of a balanced market, yet it feels like neither buyers or sellers are seeing that.
Oh yeah, because, and again, I think it's a lot of them are just so scared. You know, sellers are looking at, hey, I've got a great rate on my house right now. If I sell it, I'm gonna have to sell it for a lot less than it was worth a few months ago, and I'm gonna have to get a higher mortgage rate. That's a real thing everyone's facing, and buyers are thinking, if I buy this house, is it gonna be 2008 all over again? Is it gonna lose all of its value 6 months from when I buy it? And the reality is, I don't think that's gonna be the case.
That was a a demand-driven market.
Sure.
All right. And this has been a supply-constrained market. There's a huge difference
Massive.
between those two. And I think that the media hypes things to the point where we're not concentrating on the real underlying causes for why prices have increased so drastically the last 3 years.
Yeah, there's no underlying ticking time bomb this time around. There's just not. You don't have all these subprime mortgages that are just waiting to default like crazy. You don't have all these investors that came into any market and were buying up houses right and left. That's not what's going on here. That's not what's led to where we are at currently. So in my opinion, we just have to adjust to the new normal. And we've just hit the new normal so fast that it's going to take a few months to get there.
Demand is pent up. And the more we constrain demand by raising interest rates, the more pent up demand gets.
Yeah.
So the idea that prices are going to really tank hard and long, I just don't think is a founded concern.
I don't either. I mean, just we all understand the concept of demand now, given, the recent pandemic that we had. We all wanted to buy toilet paper. We can all relate to when we couldn't buy toilet paper. And there's all this pent up demand to buy toilet paper. When it finally was made available again, everyone pounced on it. Furniture, anything you bought in the last year, you had to wait months to get. That's what is going on with housing right now. People want to buy, but they're scared. They can't afford it because of the changes in rates. Once we adjust to that normal, there's going to be so many people that want to buy that we are going to be okay. We are going to get through this. We just, need to kind of, I guess, navigate the next 3 to 6 months, but understand that there's all of our markers generally are actually showing that we're quite healthy. It's just an adjustment period. We love Arizona, we know Arizona, and we want to share Arizona with you. When working with us, you'll never feel pressured to buy or sell. You can reach us on our phones 7 days a week. And whether you're moving in 9 days or 90 days, we're excited to help you find the right home in the right area at a price you're happy with, all while having a 5-star experience.